Hi, I'm Money Markets research analyst and Bull and the Bear podcast host Matt Clark with your Money Markets Week Ahead, what to watch on Wall Street. It is election week, and that is something investors will certainly be looking at. Also, I'm going to take a look at one company's reporting earnings this week, and here are some other things that investors are going to be watching on Wall Street. Like I said, it is election week. That's right. The wildest election in modern American history will wind down on Tuesday when millions cast their vote for president, as well as for the U.S. Senate, U.S. House, and many local races across the country. Well, I don't think the markets are going to be too driven by election results. I think next week will be one to watch for investors. I talked about the post-election stock market in a recent episode of the Bull and Bear podcast. You can check that out on our YouTube channel or on your favorite podcast syndicator. Just find where I talk about post-election stock market, and you can listen to that. In research, I found that markets may make some short-term movements based on the outcome of the election, but in the end, it really doesn't matter who wins the White House. The stock market pretty well balances itself out. The biggest impact the election will have on markets is dependent on how long results take to drag out. If you take 2000, for example, it wasn't until December that Vice President Al Gore conceded the election to then Texas Governor George W. Bush after the Supreme Court halted recounting of ballots in Florida. From election day to the day Gore conceded, the S&P 500 fluctuated more than 11%. So the biggest thing for investors to watch this week is going to be uncertainty. Markets really don't like uncertainty, and we clearly saw that in 2000. I think markets will be more impacted by more COVID-19 cases, congressional stimulus discussion, and other factors before we see any serious impact on the election. But bear in mind, it could take a few days before we actually have a winner declared in this election because of mail-in ballots and advanced voting, which has seen record numbers over the course of the last couple of weeks. On the IPO front, there are actually no initial public offerings scheduled for this week, but there are earnings and plenty of them to watch as we are knee-deep in the third quarter earning report season. There are more companies reporting earnings this week. I'll get to those more at the end of this video. But there's one I'm particularly watching. On Monday, before the market opens, Clorox company trades on the New York Stock Exchange under CLX, will release its third quarter earnings for the period ending September 30th. The reason why I'm watching Clorox is because it's had a very strong year this year thanks to the coronavirus. In fact, its revenue for the quarter ending March 31st, or the previous quarter, was $1.98 billion. That's 11% jump from the previous quarter, and a large part of that was because of cleaning products the manufacturer makes that earned a pretty big boom from sales due to the coronavirus. Big market retailers really just couldn't keep Clorox products on the shelves very long as their bleach wipes and sprays and other products just sold out like hotcakes. The company's had a nice run of earnings surprises as well. In each of the last three quarters, Clorox has beaten Wall Street projections, and in the second quarter of 2020, its earnings per share of $2.41 actually blasted those projections by 20%. Consensus estimates for the third quarter earnings are about $2.34 per share. I think there's some logic here that suggests Clorox earnings could be a bit lower than the second quarter, but I don't see a massive drop anytime soon. That doesn't mean I think Clorox will make a big run on share price. Price targets are as low as $177 per share and as high as $263 per share. Clorox shares are hovering around the $210 range right now. I can see a realistic target of $225 rather per share, but it's going to take some time for the company to reach it. I also like the consensus estimates of about $234 per share in earnings for this quarter, but watch out for that. They will report earnings on Monday. In our data dump, it is another full week of data for investors to go over this week. On Monday, the Institute for Supply Management, or ISM, will release its manufacturing report on business. This report will be for the month of October. In September, the report indicated economic activity in the manufacturing sector notched its fifth straight month of growth. The September Purchase Managers Index was at 55.4, down 0.6 percentage points from the previous month. Remember, a reading of 50 or higher indicates growth in the sector. 49 or lower would signify contraction. All indicators in September were down compared to August, but forecasts have the Purchase Managers Index reading 55.6, slightly higher than September. The Manufacturing Prices Index is expected to be at around 58.6. That's down from September's reading of 62.8, meaning manufacturing prices are getting a bit lower and causing a little bit of strain on manufacturing companies to produce at a profit. ISM will continue to give numbers for investors to watch on Tuesday when they unveil their non-manufacturing reports. These include all sectors, aside from manufacturing, of course. Activity, new employment, and new orders all registered growth numbers in September for all sectors except manufacturing. Crude oil inventories and gasoline production figures will also come out on Wednesday. One big thing coming out on Thursday, the Federal Open Market Committee, or the FOMC, will conclude its two-day meeting for November. Its widely expected the Fed is going to hold interest rates at between 0 and 0.25%, as they have over the course of the coronavirus pandemic. There'll be a press conference after the meeting concludes at around 3:30 p.m. Eastern Time. The data dump continues on Thursday when the Department of Labor will release its initial and continuing jobless claims. Last week, claims were around 751,000. That was well below the 778,000 analysts had projected, indicating a bit more speed in the growth of hiring over the course of the last month. And to finish off the week ahead, here are a look at some of the key earnings reports that are due out this week. On Monday, PayPal Holdings, Waste Management Incorporated, Clorox, as I mentioned before, and Beyond Meat Incorporated will report earnings. On Tuesday, McKesson Corporation and Thomson Reuters Corp will have their earnings reports. Wednesday, Qualcomm, the famous, the large semiconductor and chip manufacturer, will release its earnings, as well as MetLife and Allstate. A couple gold companies, Franco-Nevada, which we've actually covered before, and Kinross Gold, which is a company we've also talked about. They will be reporting their earnings on Wednesday. On Thursday, T-Mobile US Incorporated, AstraZeneca, a pharmaceutical company, Bristol Myers Squibb, also a pharmaceutical company, and General Motors will release their earnings on Friday. We'll have the hotel chain Marriott International Incorporated, and Immune Bio will release earnings on Friday. So it's going to be a busy week, and with the election thrown in the mix, it's hard to say what will happen, but I don't see markets really being hit too hard again by the election. I think it's going to be more on where talks go with the coronavirus stimulus, and as well as what those cases look like for new coronavirus cases as they are starting to tick back up as we head into the winter months. That's all for me on this look ahead for next week. And until next time, everyone, I'm Matt Clark, research analyst and host of The Bull and the Bear, wishing you all safe trading.